Colorado. Excited to be back here and see what's going on in the markets. I've been pretty much totally disconnected up until yesterday afternoon when I got in and started kind of doing a quick recap of what had happened and where the markets had gone since I departed last weekend actually. So anyway, let's jump into it. I do owe you guys a full month recap. So that should have been Friday. We'll do that this coming Friday. This coming Friday is non-farm payroll anyway, and great time to stay out of the markets and just kind of look at what a quick recap is and what happened the month prior. So we'll do that this coming Friday. But for right now, let's just go ahead and jump in, see what's going on, what we should be looking at, what we can be looking at, what's been happening, and what our trading opportunities are for today. All right, so first things first is news. I mentioned Friday is non-farm payroll. You always want to know what the upcoming high impact or potentially high impact reports could be. I'm gonna quickly close that door before the cat comes in and starts talking over me. So anyway, the high impact reports we've got this week. Obviously, I mentioned Friday is non-farm payroll. That's a biggie. That's a very watched report because it gives kind of an idea of what's happening with employment, unemployment, and job rates, so on and so forth. But other high impact reports coming up this week. Tomorrow we have OPEC meetings, which could certainly impact the what's happening in oil, which is one of the things that we watch. We also have the ADP non-farm report, this is the precursor to non-farm payroll. Sometimes you see a little bit of reaction from this, but generally Friday is the big day. We mentioned before the market's kind of like a freight train, right? That's the analogy I like to use most. It's barreling one way, and it's not going to change direction until there's some catalyst for that directional change, right? And major reports, manufacturing reports, housing is a good kind of a forecast, a bellwether, if you will, for what's happening out there in the overall economy. Employment report is another one of those that's big, especially the non-farm payroll report. Can give an idea of what's going on out there and could be that catalyst for some sort of a directional change, or at least causing that train to hit its brakes and slow down a little bit. So, over the past week, it's been on a crazy tear straight up, it seems like. So, be interesting to see what comes out of the news on Wednesday, and then of course on Friday. But do keep in mind, Wednesday, tomorrow, we have the report that could impact oil as well. So, and then go back over here. We also have, after the ADP report, a little bit later, we have a manufacturing report, which again, gives an idea of what the U.S. manufacturing, what manufacturing looks like out there. This is the biggie though over here. So with that said, what are we looking at for today? Well, for today, just kind of looking across the board here, we've got still a long bias. Even though the S&P has been on just a straight up tear, since last week, we are kind of coming into a point where it's pulling back a little bit in off trading hours. We've got regular trading hours starting here in about 19 minutes from this video. But, we are still in a long bias. The 30-minute is long and the 4-hour is long. So we do still have a long bias. I would say, if this comes and breaks that back down below 45.05, if it breaks down below 45.05 and closes below that that could be a sign that it's reversing a little bit prior to the Wednesday and Friday reports. But up until that point, we could just be seeing a pullback here. And of course, because we're long on both the 4-hour and the 30-minute, pullbacks are healthy. So we'd want to see this to continue to pull back a little bit. And then under regular trading hours, if we break back above lower high and a lower low, then we would go ahead and we would take an entry and see if we can't, catch a couple of points on this upside over here. But do keep in mind 45.05. If we break down below that and close below that, that would be a sign maybe just to step back, walk away for a bit, and let the market figure out what it's going to do. Over here on oil, Oil is, still on an upward bias as well. We've got a 4 hours long, 30 minutes long. So we'd want to see the market pull back, lower highs and lower lows, and then break out above the close of that previous lower high. Yesterday, it did have lower high, lower low. It broke out and it did continue to push higher. Unfortunately, if you're trailing your stop, it would have been taken out right here on this bar. Excuse me, I've got to sneeze. Sorry about that. I had to sneeze. So, if you're trailing your stop, this would have come out, just a couple of ticks and took you out and then, continued on. That's part of it. Manage risk first, though. Even though you might take a series of losses, managing your risk is what prevents you from, letting that get away from you and having things just totally blow out. So today for oil, same thing. We're looking for long trading opportunities, making lower highs and lower lows. And then if we break out back in the direction of that current market bias, then we'd play that long trade off the top of a previously closed lower high. Now, do keep in mind, got a little bit of a channel setting up here. I'm not too worried about that. If this does continue pulling back and closing lower, the challenge here is that your 30-minute bias might flip over before we have a trading opportunities. And if that 30-minute bias flips and crosses, then we're not going to have a trading opportunity because we'll have a mixed bias at that point. But for right now, it's pretty healthy as long as we keep making these little lower highs, lower lows. Looks like there might be some upside potential there still. And then in gold, same thing. We see the market pushing higher here. We've got a long bias, 30 minutes long, 4 hours long. So these pullbacks are healthy. Especially pulling back towards a big whole number like 1800. That's very healthy. So we'd want to be able to look at lower highs and lower lows, and then play a breakout in the direction of that previously closed lower high, and take that long, just like we saw here yesterday. We had long, or not yesterday, a couple days ago, we had that long trading opportunity where we made lower high, lower low, and then we can see we broke out and just pushed higher and higher, locking in quite a bit of profit there on gold as the market continued on in the direction of its current market bias. So again, here we're looking for long trades as well, but we want to see a pullback first. So that is it. This was probably a little bit longer than I typically go in the mornings. We will do a class coming up this Friday that's a lot longer, where we can really dig into all of the trades, why some maybe weren't trades, and just talk about how to continue using this BTX method to generate that potential profitability. Because again, like with anything else, and I've said this a million times, I'll say it again, it's not so much about the method itself, it's about being consistent, having something that you can do consistently that provides you with a quantifiable reason for being in the market. BTX method, it's super simple, and it provides you with a quantifiable reason for doing what you do every single time. It's a trend following system. We want to see everything line up and then take trades. We don't take trades every single day. We might even go weeks sometimes in a certain instrument without taking trades. But when we do take a trade, it's because everything lines up and it gives us that best potential for things to move in our favor. Does it mean that they absolutely will? No. Heck no. But it gives us the best potential for things to move in our favor. And that's what we're doing here with the BTX method. So we'll review our stats from over this past month here on Friday and talk about how things wrapped up. But for now, we've got 3 instruments, S&P, crude, and gold, that we're looking at. All have long biases right now, so we want to see the markets pull back a little bit, and then we'll take those trades in the direction of that current market bias if the conditions allow for it. All right, so that's it. Have a great day, and we'll be back tomorrow to do a recap there. All right.